Good evening and welcome to your Smart Market Reports for Wednesday, May 14th, 2025. I'm here to walk you through the key developments from Wall Street to Washington, giving you the financial insights that matter most today. Markets wrapped up a mixed session this Wednesday. The S&P 500 nudged slightly higher, up just 0.1% to close at 5,892, posting its sixth straight day of gains and officially turning positive for the year. Tech stocks once again led the charge, pushing the Nasdaq up by 0.7% to settle at 19,146, fueled by investor appetite for AI and chip makers. Meanwhile, the Dow Jones Industrial Average drifted 0.2% lower to 42,051, held back by underperformance in consumer and industrial names. It's a market still very much in search of clear direction, but leaning cautiously optimistic. In the equity spotlight, Apple shares slipped just under 0.33%, closing at $212.33, as investors digested lukewarm guidance from the company's recent earnings call. Tesla, on the other hand, surged more than 4% to finish at $347.68, extending its upward trend amid renewed optimism about EV demand in Asia and broader sector momentum. Turning to crypto, Bitcoin saw a modest dip, trading at around $103,580, down roughly 0.8%. Ethereum followed suit, down 3.4% to $2,594. That said, both assets remain well above their April levels, with Bitcoin still hovering near all-time highs and Ethereum staging a powerful two-week rally that's caught the attention of both retail and institutional traders. Shifting to the macro picture, the labor market continues to show resilience. Last week's initial jobless claims dropped by 13,000, bringing the total to a seasonally adjusted 228,000. It's a solid signal that despite rate headwinds and geopolitical uncertainty, employment remains relatively stable. April's unemployment rate held steady at 4.2%, unchanged from the prior month. Meanwhile, inflation data released yesterday showed the consumer price index climbing 0.3% month over month and 2.1% year over year, indicating that inflation is cooling, albeit gradually. All eyes remain on the Fed. As of their most recent meeting on May 8th, policymakers left the federal funds rate unchanged at a range of 4.25 to 4.5%. The central bank cited uncertainty surrounding new trade developments as a reason to pause and observe. No additional commentary or meeting minutes were released today, but investors are already looking ahead to the June decision for clues on future policy shifts. In corporate headlines, Cisco impressed the street with strong quarterly results. The tech giant beat both earnings and revenue expectations, driven in large part by software growth and the successful integration of Splunk. Shares jumped in after hours trading. Over in retail, Burberry announced it will be cutting roughly 1,700 jobs, about 18% of its workforce, after posting a £66 million loss. The company hopes the move will generate £100 million in savings by 2027. And in financial services, First Cash is making moves, acquiring H&T, the UK's largest pawnbroker, in a deal worth nearly £300 million, an expansion that signals growing ambitions across the Atlantic. From Washington, President Trump unveiled a landmark trade agreement with China that promises tariff relief and an end to recent retaliatory measures. While the full details are still emerging, the markets welcomed the announcement, seeing it as a potential tailwind for global growth and supply chain normalization. In terms of investor impact, Cisco's earnings beat is today's biggest market mover, boosting confidence in the broader tech sector. Burberry's restructuring hints at deeper struggles in the luxury retail space and carries moderate impact. And First Cash's expansion, while notable, has more targeted implications for the UK financial landscape. That's a wrap on today's financial news. Thanks for tuning in. Stay smart, stay curious, and as always, invest with insight.